But what's really interesting is what happened when we got to the all-time high was the same thing that happened as we approached the all-time high back in 2020, the 3-year all-time high back in 2020. So that was 20,000. And we got up to the all-time high or got very close to it. And then we had a pretty strong pullback. And then we went back up to it again. And then we had a little pullback. And then we went up to it and we broke through in a big way. So the fact that the reaction at the all-time high, the resistance at the all-time high was really similar to what happened in 2020. That was actually pretty encouraging.
It's Thursday, March 7th, 2024, and this is Markets Daily from CoinDesk. I'm your host, Jen Sanasie. Let's get right into today's show. Good morning, everyone. On today's show, we'll be taking a look at the markets alongside CoinFund managing partner and head of liquid investing, Seth Gins. Seth, welcome to the show.
Thanks for having me, Jen.
All right. Everyone has been waiting for Bitcoin to get back to that all-time high. It briefly touched the all-time high earlier this week. What are you watching? When are we going to get there?
So what was really interesting is we got to the all-time high way faster than I think a lot of people were expecting. And the reason that seems to be out there is the ETFs. The ETF flows have just been extraordinary. They've exceeded expectations, and they led to us getting there a lot faster. But what's really interesting is what happened when we got to the all-time high was the same thing that happened as we approached the all-time high back in 2020, the 3-year all-time high back in 2020. So that was 20,000. And we got up to the all-time high or got very close to it. And then we had a pretty strong pullback. And then we went back up to it again. And then we had a little pullback. And then we went up to it and we broke through in a big way. So the fact that the reaction at the all-time high, the resistance at the all-time high was really similar to what happened in 2020. That was actually pretty encouraging. Like we have a pattern that we can look at. It kind of gives us a little bit of a sense for what to expect as we go through the all-time high. So I took it as a nice breather. And the market has actually stabilized pretty quickly after that pullback.
All right, so if we look at past performance, it sounds like we have another brief touch of the all-time high, a small little pullback, and then we're going to break through. What's the timeline there? Do you have a timeline for me?
Well, so everything seems to be accelerated as a result of the ETFs, and inflows continue to be really strong, net inflows, so even taking into account some GBTC outflows that have ticked up a little bit. So I would think in the next few weeks, and that might be too conservative, we get the break of that 3-year all-time high. And when we get that break, I mean, if 2020 is the guide, we could see a really big move. And in 2020, it was about a month for a doubling. So that's like you doubled in a month. You went from 20,000 to 40,000 a month. That's a pretty quick move. And I'd say one of the things we're wrestling with is with the ETFs, does that mean that we're going to have a doubling even faster once we go through the all-time high? Or does that mean that we're going to go even higher than a doubling in that time frame? I'd say a month is pretty fast for a doubling. So I don't know if we need to bet on doubling in a shorter amount of time, but that could lead to an even bigger move because all these ETF flows, they're going to be pro-cyclical. So as people see the price ticking up through the all-time high, reasonable expectation would be that we're going to get more inflows. And that could lead to more than a doubling, let's say, over the month after breaking the all-time high.
Since January 11th, all we've been able to talk about is the spot Bitcoin ETF. Is there anything that you haven't heard in the narrative around spot Bitcoin ETFs that you think is still super important for folks to take note of?
So it's interesting. I think there are different views around who's driving the inflows, whether it's retail, whether it's institutional. There's a pocket of inflows, and my view is it's all of the above, right? My view is it's retail getting it through their brokerages. It's hedge funds that are using the ETF either for a directional long or for the spot part of the spot futures ARB, where they're capturing a yield there. There's a pocket that I haven't heard discussed a lot, which I think is part of the demand base, and that's governments. And I think some of the big ETF issuers are putting the Bitcoin ETF in what are called portfolio solutions. So these are portfolios that they offer to various government entities around the world where you get a bunch of equities, a bunch of credit, some real assets, and we're hearing that they're putting the Bitcoin ETFs in those solutions, and those are usually big allocations. So for a portfolio solution investment, it could be 25, 50, $100 billion being spread out over all of those different instruments. But look, if 1% or 0.5% of that allocation is going into the Bitcoin spot ETF, that's a lot of flows, and there are a lot of dollars that can be allocated in that government pool.
Tell me a little bit more about the government aspect. I think that's really interesting. Is there maybe a regulatory or political reason even why this piece of information should be interesting to folks who are looking at the spot ETFs?
I mean, I think when you think about what it means for governments to have exposure, and when I say governments, it could be sovereign wealth funds, it could be central banks. So there are a lot of different pools of capital that kind of fall into that mix. One of the implications is it becomes a lot harder for governments to start attacking crypto when they know that either they have a financial interest in it, or their peers who they respect have a financial interest in it. So it just starts to normalize ownership of the asset class. And obviously this is Bitcoin specifically right now with the ETF. But I would suspect once we have ETH spot ETFs, which we think will come sometime later this year, it has the same impact for ETH. And then that opens the door, I'd say, to broader discussion. So having broader ownership absolutely helps to advance the conversation around regulatory normalization over time.
Seth, I'm curious to get your thoughts. I've talked to a bunch of folks about the potential for a spot ETH ETF at the United States. And some people have told me that they're not so sure we're going to get that approval in May, pointing to the fact that the SEC hasn't really come out and said outright if Ether is a security or not. Do you anticipate that the path to the ETH ETF maybe is not going to be as smooth as some would hope for?
I think there are a few different paths to an ETH spot ETF this year, but I'm not as convinced that it is going to be May, which is the final deadline for the current filings, or for the iShares in particular. So I'd say just rough probability, 50% by the end of May, 50% by year end. But when you look at the setup, so the constellation of data points that led to the Bitcoin spot ETF, really similar for the ETH spot ETF. And in fact, there's some interesting tells where I would have expected that BlackRock would have held off on filing for the ETH spot ETF until they had the approval for the Bitcoin spot ETF in hand, but they didn't do that. They filed, I believe it was November, for the ETH spot ETF. So there are some tells that May could be the approval date, but we haven't been hearing a lot about movement on those applications. So I would say still a little bit TBD on that.
I could talk about ETFs all day, Seth, but unfortunately we have limited time on the show. But this is the time in the show where I get to say all of these fun words like Pepe and dog whiff hat and bonk and Doge. Meme coins are really having their time in the spotlight alongside Bitcoin and Ether. We are seeing huge rallies across the board. What does this tell you about where we are in the market?
So it's interesting. One thing that we didn't talk about with the potential break of the all-time high, is what happens to Bitcoin dominance with that move. And if you look back to the last cycle again, going back to late 2020, early 21, that big move in Bitcoin was a move that had really high dominance. So it was Bitcoin moving to the exclusion of a lot of other coins. And I think part of what's driving the excitement around meme coins right now is what's been a high dominance move into the all-time high, and people looking for beta, looking for a way to get some leverage to that Bitcoin move. It's part of the reason I think why Doge started to get in on the fun more recently. So great communities behind these coins. We've seen some of them start to parlay that community into projects, which I think is really interesting and a reason to believe that these meme coins will have fundamentally driven value, or certainly can have fundamentally driven value over time. But I think like the near-term reason why we're seeing a lot of renewed interest is because people are looking for ways to, they're betting on a Bitcoin break of the all-time high, a very big move after that, and then they're trying to find ways to get levered exposure to that breakout.
Seth, thanks so much for joining the show today.
Thanks for having me, Jen.
That was CoinFund managing partner and head of liquid investing, Seth Gins. That's it for today's show.